U.S. dollar outlook hinges on presidential election COVID-19 FOMC. The run-in to the U.S. presidential election on November 3rd will likely stoke volatility up until the point that a winner is announced, with the build-up of uncertainty probably intensifying haven inflows and, in turn, buoying the anti-risk U.S. dollar in the interim. Although Democratic nominee Joe Biden is holding a significant lead over President Donald Trump in the national polls, the spread has notably narrowed in the recent days, with the rate of exchange favoring the Republican incumbents. Euro forecast, EUR USD outlook Bleak. If 1.16 support breaks, EUR USD is in danger of dropping sharply if strong support at 1.16 breaks. The recent low for the pair was at 1.1611, touched on September 25th, and the price was last below that level back on July 24th, meaning it has now traded for more than 3 months in a broad 1.16 to 1.20 range. The 1.16 level is therefore of crucial importance, with little further long-term support for EUR USD ahead of the lows just under 1.12, reached in late June and on the first day of July. AUD USD breaks September low ahead of RBA Fed rate decisions. AUD USD takes out the September low 0.7006 ahead of the Reserve Bank of Australia, RBA, interest rate decision on November 3rd. But the future implications of the U.S. presidential election may influence the exchange rate following the interest rate decision as Congress struggles to pass another round of fiscal stimulus. AUD USD slipped to a fresh monthly low 0.7002 as the U.S. dollar advanced on the back waning investor confidence, and the RBA meeting may produce headwinds for the Australian dollar as the central bank is expected to implement lower interest rates. GBP USD weekly forecast. U.S. election the main risk. BOE to boost QE. A marginal drop in GBP USD to close week, with losses stemming from a resurgence in dollar demand as global uncertainties pick up. Idiosyncratic factors had been somewhat muted for GBP as negotiations are in the tunnel phase. That said, there had been some reports signaling that progress had been made, with both parties inching towards a possible early November agreement. In turn, this has helped EUR GBP crack 0.90, with fresh lockdown measures in France and Germany also adding to the downside. Thus, the bias is to fade rallies in the cross. Next week, it is expected that both EU's Barnier and UK's Frost will come out of the negotiating tunnel on November 3rd and likely provide an update on the latest state of play.